I wanted your view on what the extent of the economic damage could be. So far it depends on how far each side goes. I mean, it could be just one round, maybe it could extend further than that. But what's your base case now?
Good morning, and thank you for having me. Yeah, so it's a great question. I guess we've been having these conversations on and off, since February, March, when we sort of had those the first, initial announcements or threats of tariffs being introduced. However, we're still in the realm of a very minor skirmish in terms of trade. $34 billion worth of tariffs is, in terms of magnitude, is relatively small. So really, this is the right equation that we need to be thinking about here is the plurality of the tariffs, the length of time they'll be imposed, and the rate that will be imposed by the various partners. I would also sort of add to that, sort of a question mark over the time frame under which this is all sort of being figured out. So I think what we're seeing here at the moment is not a full-on trade war. Yes, it could potentially escalate into one where there are large-scale tariffs imposed for a long period of time, which would have serious repercussions. But at the moment, what we're seeing is risk premium being affected. We're seeing de-risking taking place in emerging market assets in particular. It's been focused, not unsurprisingly, in China, but it's affected all EM assets, particularly currencies. But at this stage, I'm still in the camp of this being more on the skirmish side and a headwind over the coming sort of weeks and months, rather than derailing the case for emerging markets in EM Asia.
Okay. I'll come to that in a minute, Paul, but when is it D hour? In a couple of hours now? It should be 12 a.m. in Washington, and the tariffs will kick in. When do they actually kick in? How many hours from now?
I think it's in 2 hours. I think you're right. I think it's around, I think it's at midnight. Eastern Standard Time, but I would need to check that. But I believe that is indeed the case.
No, it is. Yeah.
It's over the course of the next couple of. I believe so. I think that's going to be relatively soon. I think that's around 12 o'clock Hong Kong time.
Yeah. So in a couple of hours, do you think the markets will lose their nerve and fall, or do you expect statements? How does the day progress? I mean, I know that's not your job to look. It's a trader's job, but basically, we are very close to the important hour when the tariffs will come in.
Well, I think the way in which this has played out is that I think the anticipation of the tariffs was reflected in a derating in equities until the actual final hour. So over the past 24 hours, we've seen, I guess, some shorts being covered and some positions being squared going into the actual announcement. Now, of course, I think the way this plays out is that we get the announcement, and then we see, you can be assured that the Chinese have a pre-prepared statement waiting for the actual implementation to take place, and then that will come out, and then we'll see from there. The rhetoric so far that we've heard is that they will not extend beyond the same quantum as the year of tariffs. Now, if that's indeed the case, that's fully priced in.
But
the markets could potentially rally in that case.
But China not extending it is one issue. What about the possibility of the U.S. slapping another, tariff on, say, other countries? I mean, the viewpoint is that there are indirect implications that this trade skirmish could have, right? I mean, a hit on business confidence, a hit on hiring, a low economic growth, etc. Do you fear all of that could play out?
I think to some degree it already has. I think this has gone on longer than I think a lot of people have thought. So far, when we look at corporations and the way in which they're doing their planning, if there is uncertainty, they'll hold off on building plant and equipment. They'll hold off on particular decisions. We're seeing PMIs in Europe starting to roll over. So that I think Germany in particular I think has shown some effects, real economy effects already. I think from this trade talk.
Okay, then that's is that the way it will play out? That developed markets, money flees to developed markets. Actually, we have been seeing money fleeing out of EMs. Will that trend continue?
I think it can continue so long as we're in this current phase of tit for tat, skirmish behavior. I think we need to step back also and take a look at, as I mentioned before, we need to look at the magnitude of the tariffs. This is not a full-on trade war by any stretch of the imagination, but at the same time, it does weigh on sentiment. And what we're seeing is some haircuts. Most likely occurring on global growth, but not derailing global growth on one hand.
Yes.
And I think on the other hand, we sort of need to take a look at what the implications are. Running into the midterm elections. And this is really what the U.S. side is focusing on.
Okay,
so there is a time limit, I think.
No, let me put it this way. Somebody, I think it's Bloomberg that has calculated that the impact of these $34 billion on the Chinese economy is 0.2% of the GDP. That's not very significant at all. But be that as it may, you've seen a significant devaluation of the yuan. Now at 6.65, as it approaches 6.7, it has a depreciating impact on other currencies as well. So will you buy any EMs at all? And if you do, which one?
Okay, so that's actually a good point that you've hit on. And one thing we need to look at is trade-weighted baskets of currencies. So on one hand, there's a strength in the US dollar, and then we sort of need to then sort of delineate that against actually what is actually happening to emerging market currencies versus their own trade-weighted indices. So the CFITS index, CFETS in China, has actually been relatively flat. Okay. So PBOC policy has actually been to keep currency flat there.
Yes.
So where would I like in the region? We still like China, but the H shares, not the A. Okay. We're overweight India and also Thailand.
Okay. So overweight on India, just one final comment. Is the appetite less than what it was about 6 months back? Because even in the Indian markets, we've been facing some heat.
It's faced some heat, but not as much as some other emerging markets, and it also has some defensive characteristics because it's an economy that's much more driven by domestic demand, particularly consumption. And you've also got policy, which is also, favorable. So, the price floors of agricultural products designed to boost, rural incomes is a positive ahead of the elections in 2019. We're seeing consumer discretionary hold up well. The banking sector is holding up well, which is sort of part of the reason why we've got several banks in our top picks.